You ever notice how some biotech stocks look completely dead until suddenly they wake up and move like crazy? That's exactly the kind of story ImmunityBio, ticker IBRX, has been telling investors lately. And in today's video, we're breaking down something most people ignore: earnings. Because in biotech, earnings are not just numbers, they're survival signals. So let's talk about what's actually happening inside ImmunityBio. Right now, IBRX is trading somewhere around the low single digits, roughly in the $3 to $5 range depending on market conditions. And if you've been watching it, you already know this stock is not a stable blue chip. It behaves like a high-volatility biotech name. Big swings, big emotions, big expectations. Now let's get into the earnings story. On one side, you have revenue. And yes, ImmunityBio is finally showing revenue growth. That's important because many biotech companies for years show zero or near zero revenue while burning cash. IBRX is different in that sense. It has started generating revenue mainly from its cancer immunotherapy, product development, and early commercial activities. But here's the catch. That revenue is still small compared to its expenses. We're talking tens of millions in revenue versus hundreds of millions in losses. And that leads us to the second side of the story. Heavy losses. Every earnings report shows the same pattern. Revenue is growing slowly, but operating expenses, research costs, clinical trials, manufacturing, everything is still extremely expensive. So net loss remains significant, and this is where investors split into two groups. One group says, this company is bleeding money. It will never be profitable. The other group says, this is exactly how biotech winners look before approval and scaling. Now let's make it simple. ImmunityBio is not a normal business. It is a pipeline bet company. The entire future depends on one major thing: success of its therapies, especially in cancer treatment. Their lead focus is on immunotherapy treatments, especially ANKTIVA, which is being positioned as a breakthrough immune-boosting cancer therapy. If that product scales successfully, the revenue picture can change dramatically. But if adoption is slow, losses continue. That's the core risk. Now let's talk numbers in a realistic way. Revenue trend, slowly increasing year over year. Losses, still heavy, often in the hundreds of millions annually range. Cash burn high because clinical trials and biotech production are expensive. So what does that mean for investors? It means IBRX is not a safe investment. It is a speculation on future approval,